Happy New Year's, everybody. Welcome to the Trader Merlin Show. It is the final episode for 2024. Show number 1041. I know, I muted it. I fixed it. I saw it as I was going. Oh, you'd think it would be a perfect show to wind out the year, but oh no. Alas, I will have a glass of whiskey with you all for our Tuesday edition because I will not be doing a show the rest of the week. I'm going to be in Charlotte, and maybe, fingers crossed, we can get back to a regular flow on Monday. Cheers. Yeah, I was trying to figure something festive to wear for tonight. Did a little pizza party, keeping it really simple, down to earth. You know, I'm a social person, so I like to go out and go to real social places. But I'm just not in the mood to spend a ton of money and just be annoyed with crowds, obnoxious, 21-year-olds. So I guess I'll just stay here. Okay. Let's go into the fun stuff, at least fun stuff from my perspective, meaning what happened this year. Obviously, the title of the show is Goodbye 2024, and I'll be honest, it was a good year. I haven't looked at all of my numbers, but for the most part, I had a pretty good year. Obviously, crypto was an amazing year, but that's just long-term hold. I'm really more interested in my active trading accounts. What I'll do is I will go over those results on the 6th or 7th when we do our first show in January. I'm just a little bit too slammed to get all that data done today. So we'll go over that, but I do have other things to go over, and I'm going to start by going through the trading results for 2024. Now, we all had different forecast ideas about what was going to happen for this entire year, and we had many different market segments that we follow. So I thought I would start by going with our 2024 results from the bottom to the top and kind of work our way up. Now, what was unique about this year versus many other years is out of our 8 market indexes, I don't say indexes, but 8 markets that we're looking at, which of course is the 10-year bond, the Russell, the Nasdaq, the S&P, gold, the dollar index, crude oil, and Bitcoin. We could add more, but I think as a group we've kind of said that's enough, right? It's enough to go over every single day. And there was some talk about going more international markets, and I may put more of a concerted effort to go into international markets in 2025. My apologies for those of you who have been asking for it. Now, what was unique about this year is normally when you have a nice bullish year, there's always something that's down, right? One of those segments is probably going to be down. This year, every single market segment that we look at as our top 8 was up for 2024. So you got to kind of step back and go, well, that's impressive because typically, some commodities might go the opposite direction of the indexes, etc. So let's start at the bottom, work our way to the top. Crude oil, I think today is really what pushed it higher for the year because it'd been in this kind of sideways, choppy action for a while, and here you go with the chart of it. I had drawn out a yellow box yesterday that kind of highlighted these peaks right here, right around $71.46. Well, today we had a 1.21% move to the upside, which officially put crude oil positive for the year of 0.08%. So just barely eking out a gain, but making it a clean sweep with crude oil. Now, the question for crude oil, obviously, is what happens over the next couple weeks because it has shown enough strength to break through these previous 2 highs. And I know that the podcasters can't see that, but I'm kind of mapping out an area right around $71.50. And it's hit its head there a couple of times, and yesterday it smacked right into it. Had the dead high yesterday was, $71.56, but sold off. Today, we had momentum. We had follow-through, 1.21% gain, closing the day at 71.85. Obviously, our next target is, next obstacle, if you will, is going to be this area where we had that really aggressive down move on November 7th. So keep your eye on crude oil. Your overhead supply right now is at 72.36 to 72.88. And then after that, you got a clean jump all the way to 76. So if it breaks that, you could see a pretty nice swing to the upside. Very bullish for anybody who is long crude oil. Now let's go to our second victor here. That's the dollar index. And I have a little graphic here I'll show you in just a second. I'm calling it the super dollar just because the dollar index, oh, there it is, has really been aggressive for the year, right? When you look at the actual numbers, 7% gain for the dollar index for 2024, it may not seem like a big deal, but this is the value of our purchasing power has been increasing, getting better and better and better. Now, of course, over time, we know that what will happen is ultimately the dollar index is going to continue to drop lower and lower because of the devaluation of the US dollar. It's just normally what happens. However, we do get these swings where over a period of time, it has some exceptional strength. And if we look at that dollar index on your weekly time frame right here, you can see that for the past 6 months, we've been on a very aggressive move to the upside. Now, at one point, if I were to go back to January 1st and kind of map out where we started, which is right around those lows, we were actually down on this dollar index to the tune of about 1.24%. And all of a sudden, we just had real nice move to the upside, slightly different on this number I'm seeing here, but very nice bullish move over the past few weeks. And, this is going to be a big topic for me in 2025 because, as we mentioned, we're going to have a new Secretary of the Treasury. And that Secretary of the Treasury is a proponent of the weak dollar. He wants a weak currency. Well, obviously, our currency is getting stronger and stronger, so some changes are going to come here to push that dollar lower and lower and lower. Also, what's not helping that will be the 10-year bond, which I will get to here in just a second. Now, let's move on to our, what are we in, 6th place here. Our 6th place finisher for the year of 2024 is the Russell 2000. This is the Prince gains here, 9.99% for the Russell for 2024. Not bad. Larger than historical averages, so almost all of our indexes beat historical averages here. 9.99% up for the Russell 2000. Here is your chart of the rut, and it was actually up a lot more than that. Unfortunately, there was a pretty significant sell-off this last week to tune about 9%. So at one point, the Russell was up over 18% for the year, and all of a sudden, very quickly, had an about face for the past 7 trading sessions and gave most of that back, but still finishing a fairly respectable 9.99% to the upside. Now, this is the weekly, so excuse me, last 6 weeks of sell-off. I always switch my charts on me. There we go. There's your sell-off of the Russell. But overall, though, look at that chart, uptrend. Since those October lows, where a lot of you were loving those October lows in 2024, it's really been on a beautiful uptrend ever since. Hasn't slowed down, higher highs, higher lows. This pullback right now is a little concerning from a strength perspective, but it's still actually holding this 2,214. If we get below that, then the uptrend will officially be broken, in my opinion. You can see right here about 2180, 2190 is that last little ditch effort for this uptrend to remain intact. Then it will be broken. Next on our list is not the Russell, it is the 10-year bond. Now, this was probably the biggest surprise for me this year. I mentioned it I think in January, I talked about the interest rates are probably going to be a major factor. And in my mind, early on, I anticipated that we would see a pretty strong uptrend all year for those 10-year yields, simply because of the extensive conversations that we had with Bill Addis and understanding that in order to sell more bonds, you're going to have to make it more appealing for people. And how do you make it more appealing? You raise the rate that you're going to be paying those. So as the old debt becomes due and the government retires those 10-year bonds, right? There's always a rotation. Then they're going to have to sell new ones to cover that debt that was there, plus all this new debt, and it's been accelerating exponentially. So in my mind, I thought we'd actually be much higher than this. I thought we'd be well over 5% by the end of the year, and we weren't. Here is your 10-year bond yield. We finished the year at 4.57%, a gain today of 0.84, but on the year that yield has increased 18%. More notable is the rally off this low from September of this year. That is a rally of about 25% in the yield increase on that bond. That's significant. I mean, that is very significant, especially for anybody who is looking to acquire debt, like take on a new mortgage or new car payment. This is obviously very important for the year, although finishing off of its highs by quite a bit. Our high for the year for that 10-year was 4.73, so we're about 25 basis points off of the high for the year. And after that, you're looking at those highs right around 5%, which is where I thought that we would end this year. All right, next on our list, I'll go through these rather quickly and then dive into any questions. And of course, I know we have a thin crowd here today, a lot of people taking off, but if you have questions, type them on and I'll do my best to answer all of those today, because I feel guilty that I'm taking so much time off. But I guess I'm not taking time off. I'm just not doing a show. I'm working. Just not going to be working on the show. All right. 10-year was your number 5. Number 4, S&P 500. I actually thought we'd close above the 25% mark today. Unfortunately, we didn't. We got a continuation of this sell-off that's been going on for, 3 days, really. I mean, 3 days of an aggressive sell-off here, and then kind of the fourth day, 4 days ago, on the 26th, we had just this tiny little hesitation candle. Not too bad. There you go, Thomas. So the regulars, that's my diehards are here. That's the important ones, the diehards. So if you look at our Santa Claus rally so far, obviously this red string of candles over the last few days is not helping at all. And here's the results so far. I asked for Santa looking somewhat sad, and he looks like he's praying right here in this picture. So far for our Santa Claus rally, which of course is the last 5 trading days of the year and the first 2 of January, we still have 2 left, not looking good. We're down 0.36% today on the S&P 500, and you're looking at a total so far for the Santa Claus rally, more of a Santa Claus slump, down 1.45%. And I posted earlier today that in order for us to achieve that rate of return, the market's going to have to rally 2.82% on Thursday and Friday combined, right? It's not a good looking figure. Is it unachievable for the markets to rally Thursday and Friday 2.82%? Probably not. Definitely doable, but it feels like there's just more negative sentiment coming into the market and pushing things down. So we will have to wait and see. I will be updating this as I'm traveling, so I've got all my graphics ready for depending on what the outcome is, but not looking so good at the moment, down 1.45%. I don't know, Black Friday deals, those are long gone and already factored into the shopping spree, right? November's data is already cooked in here, so Santa does look scared. I think he looks a little bit concerned, right? He's got a lot of people riding on his shoulders this year, hoping for a Santa Claus rally. And lo and behold, we might get the about face this year. All right, let's continue to move on here. Oh, yeah, I want to do one more thing. Actually, I'll do a couple of different things here. I will go through our winner of the, I guess it's S&P. No, let's do it after. I'll do the S&P Victor here in just a second. We do have a definitive winner on that front on who wins the Trader Merlin shot glasses, which I thank you, Michael G. pointed out where I could order some more, so I'll probably order a bunch more. That way I can hand those out as time goes on. So S&P was your 4th place finisher, 23.21% gain. Let's be honest, that's a great rate of return, right? Especially in a year that during a presidential election year, 7% is the average. On a normal year, the average is 8%. So no matter how you slice it, this year was pretty darn good, up 23.21% for the S&P. So everyone should feel pretty happy about that. I'm sure most of you in your 401ks, you're loving it, right? Another nice positive double-digit gain year, very respectable. Let's keep rolling. What did Lori say? Don't know why every time I type, it shows twice. Any ideas? I don't know. You're double dipping today, Lori. All right, let's go to 3rd place. Nasdaq 100 just barely beating out the S&P 500, 24.79% gain for the year. Here's your chart. There is something to be concerned about here, right? We kind of drew out this Quasimodo. We were jokingly called this the Quasimodo head and shoulders here. The last 4 days for the Nasdaq have been pretty brutal, and we have officially broken down below these most recent lows. So we haven't seen low. It sounds sarcastic to say, but we haven't seen lows like this since, well, the beginning of the month. So it's not like it's been forever, but it is showing a closing low that is significant. And if this does come through to be a head and shoulders pattern, that puts the target for this thing down around 20,347, which would mean a decline from current levels of around 4.14%. Now, I certainly think it's plausible. It could certainly happen. We'll have to wait and see what the next few days or weeks bring us from a trade perspective, but this does not look good. I'm gonna see if I can bring this one up for you. As you guys know, I'm a big fan of Bar Chart. I love what they do. Bar Chart is just always posting great charts and graphs. They posted one. I want to make sure I get the exact stats here, so bear with me as I bring this up. Let's see, bar chart. There we go. So let me go here, and I'm just going to scroll down because one of the charts they had was, there you go, dollar index highest in 14 months. It was dealing with the number of companies. Here we go. Percent of stocks outperforming the SPX. That's the S&P index. So the percentage of stocks outperforming the SPX is like 18%. Let that sink in a second. Out of all of the stocks in the S&P 500, 18% of them are above the index. That tells you that just a very select group are pulling it up. We talked about that. That's the Magnificent Seven, right? It's Microsoft and Amazon and NVIDIA and Alphabet and Meta. Those are the ones that have been doing so well that they are pulling everything up. That can only go, here you go, breadth indicators, exactly. That can only go on for so long because at some point, those other let's say 18%, I'll round up and be generous and call it 20 for easy math. If 20% are above it, that means 80% are down. So one of two things is going to happen. either those other 80% are going to just all of a sudden join the party and start to move up above that moving average or average price of the S&P index, or those other 80% are going to continue to weigh down the economic growth and then all of a sudden starts to pull down those 20% that are above that line. So not a good thing that to see those stats. I think there was another stat in here. Where was it? He had some really good ones. Their charts are just so interesting. Here we go. Fewer than 38% of SPX stocks are now trading above their 100-day moving average. That's also bad. So, 38%, that's less than half are above the 100-day moving average, which tells you that lately things have been rolling over and not looking very good. Margaret says flawed index. I would say indexes inherently can be flawed. And it depends on the architecture of those indexes, right? One would think that an index with 500 components is diversified. I mean, if you told me you had 500 different positions in your 401k, I'd be like, wow, you're pretty diversified. However, it's the weightings that screw it up, right? The weightings in the S&P are certainly biased towards the companies that are the best performers. So if those continue to perform well, it skews the whole index. And yeah, it does make it, it does create a flawed situation. Now, let me go here to, I'm going to bring up the Nasdaq 100 weightings and look at the S&P just because it's easier for me to remember the Nasdaq weightings. But I just want to show you what those S&P weightings might look like. Let's see, Nasdaq. There we go. Oh, man. Let's see. No, I want the dab nabbit. I went to tapped the wrong thing. That's what I get for trying to move quickly here live on there. There it is. Slick Charts is the one I should bookmark this guy. So let's go to the S&P 500 and look at component performance. And we'll go to companies. So this shows you your weighting. And as you can see, all the ones that we mentioned as being those magnificent 7, Apple, Nvidia, Microsoft, Amazon, Meta, Tesla, just those top 7 alone are, boy, it's going to be some quick math, 12, 20, 24, 28, 30. It's about 35% of the index just in those companies. And to me, that's crazy because that means that I have 65% of the index is the remaining 495 companies. That's completely, I don't know. It's wrong. It shouldn't be that way. It would be nice if we actually had an even weighted index, and there are even weighted indexes, but people don't look at those. Right? People generally just are going to look at the main ones, which is the S&P 500, the Nasdaq, and the Dow and Russell. That's pretty much what the industry looks at. So not so good from a technical perspective on the Nasdaq because it's getting weaker, as you guys can see on the chart here. Let's get those out of the way. But again, end of the year, maybe it's just panic selling. Who knows? January. See if we get that off to a big start. And the newsletter I wrote for January for Trading Academy is called As Goes January, So Goes the Rest of the Year. That will be out. That should be out tomorrow morning. They'll release that newsletter, and I'll post a link so you guys can check that one out. All right, we are near the top. And some of these numbers start to get pretty darn big. Gold, also a great year. And again, quite often you see these move in opposite directions. If the risk on investment is moving into equities, as it has this year, obviously Nasdaq, S&P, Russell all up nicely. If those are up, typically what you're getting is a pull away from those kind of safe haven assets like gold. Well, gold is up 27.38% for the year. I'll bring that up for us right now. Lately, it's been kind of floundering. Since late October, it really hasn't done much. It feels like it's just lost its way, just no real uptrend anymore. Kind of a boring instrument at this point. In 2025, I'm sure we will rekindle that discussion of gold being that flight to security if we get rising inflation, as I do think we will see in 2025. And now, that brings us to the final one on our top 8 list here. Of course, it could be none other that had such a performance like this. 122.08% move up for Bitcoin. And again, everyone's freaking out because this most recent move in Bitcoin has been so negative. Oh no, it's crashing, it's crashing. Man, even with that sell-off that we've seen over the past 2 weeks, it's still up 122%. So congratulations to my my diamond hand viewers out there that are holding Bitcoin and saying, I'm not selling, I'm going to keep holding. You're all right. You're all right for a while. I mean, it does not look incredibly strong right now, but all in all, I think we will get a nice pop next year, particularly if we do see that Trump administration do what they said they're going to do over and over again. It could be a big catalyst, and there's a lot of other factors that are pushing this to the higher. Oliver says most of the bottom half of the Nasdaq are not producing exactly. And that's why when you have these bias indexes, Nasdaq, S&P are the main ones. Russell doesn't really. Russell has actually one company that's like the big overweighting in it. Everything else is fairly evenly distributed as far as weightings go. Meaning number of companies. The weight percentage-wise, Nasdaq and S&P are very biased to those top Magnificent 7 companies. Even the Dow, it has some slight weightings, but not as extreme as you would see in the Nasdaq and S&P. Let me bring up the Dow for you guys. You can see those weightings as well. Let's go to the Dow. We'll go to the companies. So here you've got obviously fewer companies, so it's easier to get more bias here. But Goldman Sachs is 8%. United Health Group is 7%. So your first company, tech company, is Microsoft at 6.13%. Apple is only 3.6% of the Dow, so it's not as impactful. Much more diversified here, even though it's only 30 companies. The weakest component of the Dow is 0.57%, and that's Verizon. That's the weakest component. If you look at the weakest component of the S&P or the Nasdaq, it's significantly lower than that. Let's go to the S&P and show you what the weakest company there is. It's embarrassing, actually. It's like, why even bother? Why are you there? Come on. 0.01%. 0.01% for like a dozen companies. Look at all these companies that are 0.01. Why bother? You have no impact whatsoever on this index. I'll read you just a few of them. News Corp, FMC Corporation, Fox Corporation, Paramount, Franklin Resources, Mohawk Industries, Walgreens, Bog Warner, Brown-Forman, Caesars. Caesars is 0.1%. What that means is Caesars tomorrow could declare bankruptcy and their share price could fall from $33.43 to zero, and it would not move the needle on the S&P 500 at all. No one would even mention it, and they could disappear tomorrow and it would not impact this index in any way, shape, or form. Really kind of silly. Why even have an index that big, right? It should be much more balanced. No, I don't think that this is price weighted. The reason I know it's not price weighted is you can look down here and you can see companies like Avery Dennison at $187 per share. It's only 0.03% of the index. Whereas if we go back to that Dow, let me bring up the Dow real quick. Well, there's a lot in here. So many companies. And I don't know what the logic is as to why you want to have those types of weightings. The Dow is a price-weighted index. So what you're getting is, notice here, it's all sorted by price. Whoever is the most expensive is at the highest one. So what really screws up indexes like this, if it's price-weighted, is, here you got Verizon Communications, all right? Up at the top, your heavily weighted one is Goldman Sachs. Now, there's a lot of people that believe that a high price deters people from buying into those investments. You get out of your Robinhood investors who got $100 and they can't buy Goldman Sachs. So what happens is when these companies split, let's say Goldman Sachs, which is trading at $574 right now, they decide to do a 10-for-1 reverse split. Now their share price is $57. All of a sudden, their weighting on this index is going to drop, and they will now be the 29th. Actually, they'll be the 29th one on the list. They'll have almost no impact on the index again. So there is some psychology, some strategy that is put into stock splits, especially when things are part of the Dow Jones Industrial Average. Because if a stock got in here at $1,000 per share right now, they would be the most controlling component of the Dow Jones Industrial Average. Very, very biased and screwed up index. So remember, the indexes are just there to kind of give you an idea of what's going on, but it's nice to dig into it a little bit and really understand what's going on behind the scenes of these indexes, because they're faulty. They're absolutely faulty. All right. Merlin, you're going to sell your cryptocurrency? At some point, I'm guaranteed I'm going to sell it all. It's just a question of when, Chio. The plan still is next year. I'm planning on moving my crypto from my ledger to an exchanges. I want to spread it around. Probably in August. And just getting ready. And I'll just set numbers for myself. If it gets below this number, dump it. All right. At that point, should be happy enough with those gains that I'll be set for forever, essentially. But I'll be looking to buy back in once it sells off, if that 4-year cycle comes to fruition. It would be great to be able to pay your tax with a Bitcoin, and that may happen at some point. Look, we could see some very interesting things happen over the next few years. There's the talk of a flat tax or a fair tax is starting to increase. Maybe that'll happen. There was a rumor, not a rumor, but a statement that Donald Trump made that he doesn't want to tax Bitcoin gains, which would be like, man, I might even get a tattoo of Trump on my forearm if that happens. No, I'm kidding. That would be pretty significant for anyone who's holding Bitcoin. I know some of you purchase your Bitcoin, when it was at $15,000, and here we are at 90. Well, you got to pay capital gains on $75,000 worth of gains. If that became tax-free, man, what a fantastic opportunity to sell crypto. And that may line up next year. Who knows? We'll have to wait and see what happens. But yes, the plan still is to sell. Walgreens will be out of business soon. They'll be out probably. But they're insignificant in the S&P. Like, when you hear something being added to the S&P, it's like, okay, well, what weighting, what percentage? You saw that happen with SMCI, right? SMCI got added to the S&P, I think, and then talk about them on the Nasdaq as well. I want to try Amazon Pharmacy. Maybe. I'm trying not to have to take pharmaceuticals. I'm not that old yet. I'm going to read all kind of pick up price meds. Same day I bought the computer. Takeover rumors have not helped Walgreens Boots Alliance. Yep. As far as the business goes, it's not a bad business. It just seems like it's poorly run. You could go and there's a lot, Rite Aid and Walgreens and other stores are very similar in what they hold. I only go there when I have a cold or something. I need to grab some Theraflu or some cold meds. That's pretty much only reason I go there, or for prescription pickups. But it might be a target. I talked about Kohl's the other day of being a target for Amazon. Well, Amazon wants to get into pharmacy. Maybe they use that as their pharmacy. Obviously, they're going to have pretty skilled financial experts and analysts looking over all of these things, but it could certainly be a takeover target, just like Big Lots was. Let's see. Tiger. Got to run, Thomasina. Hey, thank you very much, Thomasina, for your support over the years. Have a fantastic New Year's Eve. Do something fun. I will see you on the 6th or 7th. Let's see. I agree with Margaret. Online pharmacies, Amazon won't be long before they go under. I agree. The question, Steve, and it's a legit question I have. I'm curious what you guys think. As this, in my mind, inevitability comes, where, look, it's just much easier for me to order pharmacy stuff online. Pretty soon, Amazon I'll just open up the Amazon app and like, oh yeah, I'll send that and this every Thursday, whatever. I don't have to go to the store. I don't go talk to anybody, give ID, and none of that stuff. It's just all done online. What happens to these stores, right? John O'Donnell and I were doing a show on Power Trading Radio years ago, and we were talking about what was the future for malls. Now, obviously, I have South Coast Plaza here, which is just this high-end, everybody thinks that they're so fancy and bougie and they go to South Coast. It's all, they're big name brand stores, not like Kohl's, but like Dolce & Gabbana and Prada and Fendi. They're real discretionary income spending stores. But at some point, I think you're going to see the malls disappear. I used to hang out at malls as a kid just because it was the fun thing to do, but at some point, online businesses and retailers are going to take away a large chunk of that. And what happens to that real estate? Right? What do you turn them into? Are we all going to have just giant skating rinks? It's going to be a paintball arena where you can do a post-apocalyptic laser tag thing in a mall? I don't know. It seems to me it's going to be a very an interesting thing in the future for companies like Simon Property Group, SPG, or other companies that are big in malls and those kind of REITs that are in commercial real estate. SPG, your Simon Property Group, what did it do for the year? No, it's a pretty good year actually. Definitely significantly up. But yeah, I don't know. I really don't know what's going to happen with all those things. I look at a lot of these strip malls and we're just going to start buying more and more stuff online, and I'm guilty of it. I believe Macy's is closed, not all their stores, but some of their stores. Are you still looking at Bitcoin possibly down to 88K? Yeah. Okanola asks if I still think Bitcoin's headed down to 88. Look at the trend, right? We'll just look at the picture of it right now. What looks like is happening. It's just drifting lower. So, you do have this 92 mark, which is certainly a floor. Let's be honest. I hope it stops here. I hope it stops here and rallies back up. But I do think that the 88, maybe even 87 is still very much in play from a retracement perspective on this. And we need another catalyst. And with MicroStrategy stock tanking, right, you had a pretty ugly down day today on MicroStrategy, MSTR. Right, you're down 4% today on MicroStrategy. This certainly puts pressure on MicroStrategy. If Bitcoin continues to rally, then it's good for MicroStrategy. They can issue more shares. They can buy more Bitcoin. If MicroStrategy continues to sell off here, this could actually almost start to have an impact on Bitcoin, not the other way around. right? We've been looking at it as Bitcoin's price impacts MicroStrategy, but MicroStrategy may actually impact the price of Bitcoin. Reason being is if MicroStrategy gets too low in price, if the short sellers keep hammering it lower, it could force them to liquidate some of their Bitcoin holdings to cover some of the debt that they owe. Now that's further down in price, but that certainly is a possibility, and that could cause a substantial amount of selling in Bitcoin. So we'll wait and see. I don't think we're going to have a crash in Bitcoin or MicroStrategy. I think MicroStrategy is going to drift a little bit lower, just like Bitcoin, and then we'll stabilize and start to move back to the upside. Let's see. Merlin, do you use any kind of software to keep track of all your trades for every year? No, I don't. For the exchanges, like if I'm using Schwab or if I'm using, E-Trade or TradeStation, whatever the brokerage firm is, they issue all the statements, and I just take those. I used to itemize everything, but I just do too many trades. So I use all that. Now for crypto, I do keep track of everything I've done. Not like the $100. Like I bought $100 worth of meals the other day using Bitcoin. I'm not tracking that one, but like if I sell 50 grand of something, yeah, I'm watching those taxes so the IRS doesn't come after me. Don't want that. Mall Cop's hilarious. Paul Blart Mall Cop. A lot of pharmacy chains are owned by insurance companies now. Ooh, sad. That's even worse. Oof. Let's see. There will be a lot of buildings open for rent. I think so. We talked about commercial real estate in San Francisco as one of those ones that, to me, has me really nervous. Extremely overpriced. You've got massive crime. You've got, in my opinion, a city that's in chaos. I mean, luckily the laws have changed. They're starting to crack down on things a little bit in San Francisco, but businesses are leaving. I mean, In-N-Out, which is one of the most successful chains ever, I don't even think they have a failing In-N-Out burger anywhere. The one in San Francisco, or one of the ones in San Francisco, was very profitable. They were doing well, and they just shut the doors. It was just too much crime. They said, we want out. We're done here. Something's got to change. And if that continues to happen, you have all of these businesses, and we saw a lot of big name box retailers. Nordstrom's, I think, left, and Macy's left, the big malls. What are you going to do with all that real estate? No one wants to go there because they're just going to get robbed, and the police won't do anything. I wouldn't set up shop there either. So the laws are going to have to change in San Francisco, and people actually get punished and go to jail, or I don't know what would be the outcome. We're going to have a lot of empty real estate spaces. So yeah, I do think commercial real estate could be in potential big trouble. Do I use a commitment of traders report? I'm curious to see because I've been studying them a lot lately, trying to follow the coattails of the big boys. No, I don't use commitment of traders. I'm not that big on commodities. So every now and again, I will dabble and play with commodity futures. I'll do gold futures, but not like corn, wheat, soybeans, those types of things. So no, I don't use it. I know that for people who are commodities traders, I would say it's critical. I would say it's essential. Don Dawson, who I used to work with, great guy. Really like Don Dawson a lot. He writes articles for Bar Chart. So I would encourage you guys to follow him, especially, I'm sure, Tiger, you know that one. If you are interested, let me see if I can bring it up here real quick. If you are interested in commodities, seasonality, commitment of traders, Don Dawson has a ton of stuff here. Let me go here. Oh man, where was it? Learn? I forget where all the newsletters were. Where was all the articles? It used to be right here on the front page. See more. There you go. Featured authors. So you go here, Don Dawson, and then you'll get all of his new stuff. So he's a very good guy. This is, he's one of those guys that doesn't need to do any teaching. He just loves it, kind of like I do. Like I really like teaching. I love when light bulbs go off, and especially when people, turn that corner of success and that you can see that they're grateful. And to me, that's the reward behind teaching. Obviously, there's some monetary compensation, but it's not a necessary piece for survival. And Don's in that camp. Don just does it because he loves it and just writes articles. He's a trader at heart. That's what he does. So he's got a lot of great content. Check that one out. Let's see. So yeah, I don't use commitment to traders. Who is your OTA trader friend? Who is the expert? Yeah, Don Dawson. There's a few, but Don Dawson is the one who really, for him, it's like the Bible for what he does. I've seen a few mall buildings turn into apartments and keep me up. Saw a video on the Bar Chart YouTube page and Don Dawson was on it. Yep, great, good. Tell him I said hi. In-N-Out Oakland closed due to crime. Oh, is it Oakland? I thought it was San Francisco. Maybe I'm mistaken on that one, RG. I knew it was one of those two. Oakland kind of makes sense. Oakland when I grew up in Northern California, Oakland was the armpit of the Bay Area. Like, no one wanted to go there. And it actually got a lot better, right? Oakland got improved, felt a lot safer. But look, if your government in a city is so bad that you lose a professional football team, you lose a professional basketball team, and you lose a professional baseball team, something's wrong. And the Oakland area has since lost all 3 of their major sports teams. They got nothing but an airport and a university now. So, yeah, not that great. Man, I just went off on some tangents on that one. Tangents. Let's see. What else do I have here to talk about? We talked about Santa Claus Rally. We talked about that one. I think I got all the stuff I need to get covered. Let's real quickly go, and I do want to look at the economic calendar because I will be gone for the next couple of days. But as was brought up, there are some important details coming out later on this week. So obviously tomorrow markets will be closed, so don't do anything. Enjoy, recover, sober up. I will be doing a dry January, so I will have to have like a glass of orange juice or something on our shows on Friday. But yeah, I'm going to do a dry January. Never done it. Well, why not? I'll do a dry January, and I'm also going to go back to doing my 100 club, which is 100 push-ups a day. And then I have a pretty significant incentive, which I may disclose a little bit later on, a pretty significant incentive to finish my book. So I've been somewhat fueled and got a lot of things. Of course, New Year's is that year of setting goals and disappointing yourself as you don't achieve them. So I'm hoping I can achieve those. At least I know January I can do the 100 club, which is 100 push-ups a day. I can do the dry January, and I'm pretty sure I can get my book done relatively quickly, so we will see. All right, economic calendar for you. Thursday, as we start to look at what's going on in the U.S., we do have some unemployment numbers. Of course, that's every Thursday. We do have the unemployment claims. Other than that, you do have final manufacturing PMI, construction spending, and crude oil inventories. Now, we have a little bit of a breakout to the upside for crude oil. That might be interesting to see what those numbers are. And then on Friday, you've got the ISM manufacturing PMI numbers, so we'll see what the manufacturing looks like, as well as natural gas storage. So that's pretty much it. And then Monday, I'm a 50-50 right now. I forgot to look at my flight times, but I think I'm going to be here. I arrived too late to do a show on Monday, but I will let you guys know on Twitter. I'll tell you if I'm going to do a show or not. Toby says, dry months make for a lot of brain cells saved. Keep it up. Let's be clear. I'm not like a excessive drinker. I'm a social drinker. I'll go out on a Friday, Saturday, and have a beer or two. So I'm not a drink every day kind of person. That's just not my style. Although tonight I will certainly have a few because it's the last drink for 2024, and I'm looking forward to that one. What do I do for New Year's Eve? It really depends on where I am. I kind of made it was a rule of mine years ago that I want to go spend it somewhere else every year, just go different places, and that fell apart. So lately, just been invite some friends over, stay home. We're gonna have a pizza party tonight, and then play some games, make it nice and easy. But I'll make it to midnight. I make it to midnight every night because I'm an insomniac. But a lot of my friends are. Midnight is just unbelievable. They would stay up that late. So we'll see how many make it past the finish line tonight. But yeah, that's what I'll be doing. Taking it easy. I hope that you guys all do something fun and exciting. Be safe out there. I was told from a friend of mine, be careful. I don't like to go out because there's too many drunk drivers out there. It's the worst night of the year. It's actually not the worst night of the year. The worst night of the year is 4th of July. I think there's more drunk driving accidents on 4th of July than any other year. But either way, be careful out there. Don't do anything too crazy. Let's see. Any other last comments here? Let's see. I'm looking forward to the book, Merlin. Yeah, me too. I'm looking forward to just getting it done, right? Getting it out of the way. It's been something that's been like this white elephant or monkey on my shoulder for so many years. I just get bored with it, so I just have to finish it. And like I say, I've been incentivized to finish it, so that's pretty positive. I'd like to get past this one and then work on my fiction book, which I'm pretty excited about as well. Oh, thanks, Andres. Yeah, my best wishes to all of you guys as well. I'm going to start to wrap things up here. It's actually kind of a short show, but when we look back at like Thanksgiving and the holidays, I'm always grateful that you guys continue to watch this program. It's I guess you've made it part of your routine, and I appreciate that. If there's things that you want to see me add, change in 2025, email me, tradermerlin@gmail.com. I'm always open to suggestions and try to make things better and put in new investments in the studio here to make it a little bit better. We got better lighting now. I got a better camera, dialed it in at least. And then, I don't know, we'll see. I will try to do some more international market stuff. I don't trade international markets anymore. I used to, but if you guys want something like that, happy to incorporate it in. So let me know kind of what you guys want to see, changes. If not, I'm fine doing the status quo. And thank you guys so much for all that you do. I appreciate it. We're not done. No. We got one more thing. Any guess for January? I haven't really looked at guess for January, but I guess I could. Let's see. Where was it? There's a graphic right here. Oh, come on. All right. So this is the 2024 results. Now, at the beginning of the year, and I will do this next week as well, we will make forecasts yet again as far as where the markets will be. So what I'm going to do here is I'm going to go over to the SPY. No, we did this off of the SPX. So let's go to SPX here. I'll go up to the top, long way up. Where's my SPX? There it is. SPX closing today at 58.81. So we come over here and we will see that the SPX was, we have 110 point gain. Well, let's scroll up here and go to 58.81. We're almost there. Was that really the high side? So 58.81, almost, you got really dang close to getting it spot on. Michael G had 5,800, but Lisa had 58.04, but less, 58.70. You had thought less than there'd be a 23.09% gain this year. Lo and behold, you were the closest one without going, well, I guess you can go over, but yeah, there you go. So Les, do me a favor if you wouldn't mind. You can email me. You know my email address. If you're still here, and I may actually have it. I think you've emailed me before, but send me a mailing address where you want me to send you your prize for the year, and I hope that you drink, because they're 2 shot glasses, which Michael G gave me a year or so ago, and I'm going to order some more of those so we can maybe do more of those giveaways just for fun. But congrats, Les. At the beginning of the year, I would look at saying 23% gain for the year, and I thought, man, that's pretty lofty. But no, lo and behold, there it was. So what's interesting is it was right at the top of the list, right? You were number 5 from the peak. I think Daryl was a little bit shooting for the moon at 76% gain for the year. Other than that, you had 6,200s. You had Karen with 6,150. Corey was at 6,000. So almost had to give those shot glasses to Corey, but lo and behold, it was all for you, Les. I won next year, so you don't have to come up. Okay, there you go. Well, we'll do this again in January. Not yet. Just let me get to the January show, and then once we do the first show of the year, I will do the whole list, and we'll see how it goes. Yeah, that's fun. Something. Maybe we can do like a beginning of the year. We'll do the forecast at the beginning, and maybe on July 1st, which is 6 months in, we'll do 2 prizes, and we'll do a 6-month prize, and it's based off the same numbers, and then we'll do a prize at the end of the year. All right, everybody, I guess that's going to do it for me. Again, if you have anything you want me to change, suggestions, comments, you guys are the regular diehards that have to tolerate me and my antics and my mistakes on a regular basis. If there's things that you don't like, that's fine as well. I take constructive criticism, so let me know what it is that you like, what you dislike, and maybe things you want to see in 2025. I wish you the best evening tonight. It's not like it's a long day away, but you got the market closed tomorrow, and then you guys have Thursday, Friday, which will probably be a very light volume couple of days. Maybe we can do Bitcoin as well. We can do Bitcoin. Maybe we'll do both. All right. Well, thank you guys so much. I'm going to wrap it up. I'm going to go and get ready for the pizza party. So, again, thank you guys so much for all your support over the year. I look forward to a pretty great 2025. I think it's going to be similar to this year. Lots of volatility. We have expectations of what's going to happen, and then curveballs will come our way, and it's really down to us and how we adapt, change, and kind of capitalize on those moments. So have a fantastic new year. Be safe. I will see all you guys in probably about, it's on the 6th or 7th, and I'll let you know on Twitter. So happy New Year's, everybody. Take care. I'll see you in 2025. Be safe.